Hello everyone, this is Vivek Anand, Assistant Professor, Department of Management, Tirthankar Mahavir University. Again, we are going to discuss some important aspect of auditing under the head of company audit. After the appointment, the auditor's remuneration will be discussed. So, in the topic of auditor's remuneration, this topic is governed by Section 142 of Companies Act 2013. First point, determination of remuneration. The remuneration of the auditor of a company shall be fixed in the general meeting or in such manner as may be decided in the general meeting. Point B, however, board may fix remuneration of the first auditor appointed by it. Means the remuneration of a company auditor will always be fixed, or the process to ascertain the remuneration is decided in the general meeting. But in case of first auditor, board of directors are authorized to fix the remuneration of the auditor. Auditor means the first auditor, that is also appointed by the board of directors. So the whole sole body to fix the auditor's remuneration is general house, general meeting. It is not compulsory to fix the exact amount of remuneration of the company auditor, but in what process the company is decided the remuneration of company auditor, the process may be fixed in the general meeting. So whether the exact amount or whether the process to calculate the exact amount may be decided in the general meeting. Second point is components of remuneration. Some elements are there that should be included or excluded from the term remuneration. First, inclusions. The remuneration in addition to the fee payable to an auditor include the expenses, if any, incurred by the auditor in connection with the audit of the company. Means any expenses that is incurred by the auditor will included in the term of remuneration, but the expenses is strictly in connection with the audit of the company and facility extended to him for the audit purpose or in the completion of audit assignment by the auditor. If company extend any facility towards the auditor in the process of doing the audit work, it is also included in the term of remuneration. Exclusions. It does not include any remuneration paid to him for any other service rendered by the auditor at the request of the company. Suppose Mr. A is appointed as a company auditor in XYZ Limited, and XYZ Limited for the audit work paid a sum of rupees X to the auditor A. If the XYZ Limited extended any facility towards Mr. A company auditor, then it will included in the term of remuneration. Means amount X plus the value of facility. But if XYZ Limited accept management services, tax consultancy, HR consultancy in addition to the audit work, then management work, tax consultancy, HR consultancy या management consultancy is taken into other services rendered by the auditor towards the company on the request of company, and it will always be excluded from the term remuneration. Consequences of not fixing the remuneration at the time of reappointment of retiring auditor. If it occurs that at the time of retirement of the auditor, the remuneration did not fixed by the members of the company or in a general meeting, then the existing remuneration will continue. Suppose company auditor Mr. A has been retired and next auditor B is, and the same auditor, sorry, suppose Mr. A company auditor has been retired and the next auditor will again Mr. A, and in the appointment meeting remuneration not fixed at the time of reappointment of retiring auditor, then the existing remuneration which is earlier accepted by company auditor Mr. A will continue for his next tenure or of auditorship. Next tenure of auditorship. Okay, so this is all about auditors remuneration. If we conclude it, then we find that the appointing authority is always the remuneration fixing authority, that is journal house, general meeting. Let we discuss the new aspect of appointment of auditor, that is appointment of auditor other than retiring auditor. Actually, this is the situation when a auditor which is existing in the company, and after the end of his tenure the new candidate, new auditor will be appointed. This situation is governed by the section 140 subsection 4 of Companies Act 2013. Let me discuss the provisions provided in this section. First is requirement of special notice. Subpoint A, content of notice. A special notice shall be required for a resolution at AGM for appointing a person as auditor other than a retiring auditor, or providing expressly that the retiring auditor shall not be reappointed. Means this type of resolution has been passed, but a special notice is required at annual general meeting for this purpose, that retiring auditor will not be reappointed again, or appointing a person as auditor other than retiring auditor. Subpoint B, receipt from whom? Who will serve this special notice? Members holding not less than 1% of total voting power or holding shares aggregate sum of not less than rupees 5 lakh has 5 lakh paid up on the date of the notice. Timing of receipt of notice not earlier than 3 months but at least 40 days before the AGM. Means members, these category of members place a notice to the company. Disappoint. Non-requirement of special notice. Special notice shall not be required if the retiring auditor has completed consecutive term of 5 years or 10 years as provided by the provisions of Companies Act. 5 years for individual, 10 years for the firm. So here first an application or notice from the side of members should be forwarded to the company. For what purpose? For appointing of auditor other than the retiring auditor. Members holding not less than 1% of total voting power or holding shares aggregate sum of not less than 5 lakh rupees has been paid up on the date of the notice. These category of members forwarded a application towards the company, and on the receipt of the application from the side of the members, company arrange a meeting to put a resolution at annual general meeting. But the application from the side of members should be forwarded towards the company not earlier than the 3 months but at least 14 days before the annual general meeting. Means a company is going to conduct annual general meeting before the 14 days of annual general meeting, or not for the 3 months from the date of annual general meeting. A company have to receive a application from the side of members regarding appointment of auditor other than retiring auditor. And in annual general meeting, the company passed a special resolution for this purpose. And to conduct the AGM, a special notice is also served by the company towards the members for AGM. Special notice is not required if the retiring auditor has completed consecutive terms of 5 years in case of individual or 10 years in case of a firm. Second point is informing retiring auditor. On the receipt of notice of such a resolution, the company shall forthwith send a copy thereof to the retiring auditor. Retiring auditor is authorized to receive such a copy. Third point, right of auditor to make representation. After receiving the notice of such resolution from the side of company, the auditor can make his or their representation. The retiring auditor is entitled to make representation against his removal. It should be in writing, not exceeding a reasonable length, and shall be sent to the company, and auditor may request the company to circulate the representation to the members. These are the points that should be from the side of auditor in form of his or their representation. Representation means his thoughts, his explanation against his removal or against his not appointing in the next tenure. It is expected from the auditor that his representation in writing and not exceeding a reasonable length and shall be sent to the company. He may request to the company that his representation should be circulated to the members. Now, fourth point, after the receiving of representation from the side of retiring auditor, the duty of company is the company shall state the fact that the retiring auditor has made representation against his removal in any notice of the resolution given to members of the company. Means with the information notice of annual general meeting towards the member, the company shall state the fact that retiring auditor has made representation against his removal. The company shall send a copy of the representation at least 7 days before the date of AGM to each and every member of the company to whom notice of the meeting is sent, unless the representation is received by the company too late. This point imparts us that after the receiving of representation from the side of auditor, the company shall send a copy of the representation at least 7 days before the date of AGM. But if representation is forwarded from the side of auditor to the company too late, then it is not compulsory from the side of company to circulate it to the members. If a copy of representation is not sent as aforesaid because it was received too late or because of the company's default, then the auditor may require that the representation shall read out at the meeting. A copy of representation shall be filed with the registry. And both the requirements have to be fulfilled from the side of company. Abuse of right to representation by auditor. Abuse. If the tribunal is satisfied that the right to make representation is being abused or taken disadvantage by the auditor, then the tribunal may order that the copy of the representation need not be sent to the members and need not be read out at the meeting, because the auditor is taking disadvantage regarding his right of representation. The tribunal makes such an order either on an application made by the company or any other aggrieved person. Aggrieved person. Okay, now concluding this, first, application to change the auditor should be received by the, or requirement should be received by the member. Then company issue a special notice of annual general meeting and mark the agenda as appointment of auditor other than the retiring auditor, and the information should be circulates towards the members. And information of this fact that the existing auditor will not be reappointed in this AGM have to be circulated or served by the company towards the auditor which is going to retire. When the retiring auditor finds the notice and agenda that existing auditor will not be reappointed, then he have a right to make a representation, a written representation against his removal, and he also have a right to request the company to circulate his representation to the members. After receiving the representation, if sufficient time is there, then company may circulate this representation or a copy of representation to the AGM, or by including the important point from the representation of auditor in the notice of AGM, the company may circulate it to the members. Suppose the copy of representation from the side of company auditor is not received by the company in time, and company is unable to circulate it towards the members of annual general meeting. Then auditor may request that the representation shall be read out at the meeting, or a copy of representation shall be filed with the register. Here is a some curve on the right of representation of auditor, that if the tribunal is satisfied that the right to make representation is being taken as an disadvantage by the auditor, then the tribunal may order that the copy of representation need not be sent to the members and need not be read out at the meeting time. Even the tribunal makes such an order either on an application with the company or any other aggrieved person. So this is all about appointment of auditor other than retiring auditor. Now, next topic is circumstances when retiring auditor cannot be reappointed. When retiring auditor cannot be reappointed. This topic is governed by the section 139 subsection 1 subsection 9 and section 139 subsection 10. Let's read the provisions of Companies Act regarding the circumstances when retiring auditor cannot be reappointed. Point A. The auditor proposed to be reappointed does not possess the qualification expressed under section 141 of Companies Act 2013. B point. The proposed auditor suffers from disqualifications and under section 141 subsection 3 and section 144 of Companies Act 2013. C point. He has given to the company notice in writing of his unwillingness to be reappointed. Point D. A resolution has been passed in annual general meeting appointing somebody else or providing expressly that the retiring auditor shall not be reappointed. E point. A written certificate has been obtained from the proposed auditor to the effect that the appointment or reappointment, if made, will be in accordance with the specified under section 141 subsection 3 clause G of the Companies Act 2013. F point. Where at any AGM no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company again. So, circumstances are when the auditor didn't possess the qualification of auditor, then he will not be the company auditor. Even if the proposed auditor attract any disqualification or fall under any disqualification provided under section 141 subsection 3 and 141 of the Companies Act 2013, then the retiring auditor cannot be reappointed. Even suppose Mr. A is the existing auditor and he has given a notice in writing that he don't want to be reappointed again as the auditor in this company, then retiring auditor cannot be reappointed. If a resolution has been passed in the AGM that somebody else will be appointed as a company auditor, or especially providing that the retiring auditor shall not be reappointed, whatever the condition. It may be happen that existing auditor will not be reappointed. It may be happen that somebody else will be reappointed on the place of existing auditor. If a written certificate has not been obtained from the proposed auditor to the effect that the appointment or reappointment, if made, will be in accordance with the specified under section 143 3G of the Companies Act. This is also a situation in which retiring auditor cannot be reappointed. And the last point is where at the AGM no auditor is appointed. Suppose AGM has been conducted and no auditor is appointed till the end of the AGM. Then what will we do? In this situation, the existing auditor shall continue to be the auditor of the company. Well, let me discuss the removal of auditor before the expiry of his term. At the time of appointment of auditor, we have discussed that the first auditor will continue his office as auditor till the conclusion of first AGM, and then subsequent auditor will hold his office in the capacity of company auditor till the conclusion of sixth AGM, means full 5 year for the subsequent auditor. Okay. Section 140 subsection 1 deals with the removal of auditor before the expiry of his term. Three main important things that have to be kept in mind regarding the removal of auditor before expiry of his term. First is, according to Companies Act, the auditor appointed under section 139 may be removed from his office before the expiry of his term. In first point, law himself providing the authority to remove the auditor appointed under section 139(1). Second, procedure for removal. There are some steps to remove the auditor. First is, first the board of directors should pass a board resolution at the board meeting to remove the auditor. Then the application shall be made to the central government in prescribed format within 30 days of the resolution passed by the board to get its approval. Means, first the board of directors should pass a board resolution at a board meeting to remove the auditor, and then the information regarding this resolution should be sent to the central government in a prescribed format. Third point, the company shall hold the general meeting within 60 days of receipt of approval of the central government. Means, when the information to remove the auditor will circulate it to the central government observe it and place the order as approved or not approved. The company shall hold the general meeting within 60 days of receipt of approval of the CG for passing the special resolution. Main third point है opportunity of being heard. It is important to note that before taking any action for removal, before expiry of the term, concerned auditor shall given a reasonable opportunity to being heard. In all cases, the auditor is authorized to get some time to prove himself. Okay. Then, in case of removal of auditor, if we conclude, then we find that the law itself providing some situations in their provisions to remove the auditor before the expiry of his term. But there should be a opportunity to being heard for existing auditor. Let me discuss the audit committee. Earlier in the topic of manner and procedure for appointment of auditor, we discussed that first audit committee, after observing the candidature of the person who want to be a company auditor, analyzed by the audit committee and forwarded by the audit committee to the board of directors for approval. So this is that body, audit committee, that is actually responsible for these type of activities of the company. Audit committee is governed by the section 177 subsection 2. This is not a older concept to maintain the audit committee. The first point is meaning of audit committee. Actually, audit committee is a fundamental element of the corporate governance system in public companies. It aims to boost public confidence in the reliability of the company's internal control procedures, financial reporting, and announcements. Its main responsibilities are disclosure and financial reporting. It evaluates and records the auditor's objectivity, effectiveness, and performance. It also examines the financial statement and the audit report. So, in case of financial aspect of a company or checking aspect of a company, means checking of books of accounts of the company, it is a gray area for a audit committee. So this is exactly all about the audit committee. But all the companies are not required to maintain the audit committee. Section 177 of Companies Act 2013 provide that a class of companies and every listed company are required to have an audit committee of the board. In accordance with Section 177 of the Companies Act and Rule 6 of the Companies Rules 2014 provided the powers for maintaining audit committee. As per the Companies Act, all public companies having a minimum paid up capital of 10 crore of rupees 10 crore and all public companies with turnover at least 100 crore rupees, at least rupees 100 crore. All public companies with aggregate outstanding loans, borrowings, debentures, or deposit exceeding rupees 50 crores. Rupees 50 crore. The paid up share capital, turnover, outstanding loans, borrowings, debentures, or deposits as appropriate as they existed on the date of the most recent audited financial statement shall be taken into consideration for the purpose of this rule. Means only public company having minimum paid up capital of rupees 10 crore or turnover of at least 100 crore or aggregate outstanding loans, borrowing, debentures, or deposits exceeding rupees 50 crore are required to maintain a audit committee as per section 177 of the Companies Act. Rest companies are not required to maintain the audit committee. So, audit committee evaluates the records and the auditor's objectivity, effectiveness, and performance. It also examines the financial statement and the audit report of the particular company. But only public companies with the category of minimum paid up capital 10 crore, turnover at least 100 crore, aggregate outstanding exceeding rupees 50 crore are required to maintain an audit committee. And on which date these criteria have to be fulfilled? The related date is most recent audited financial statements shall be taken into consideration for the purpose of this rule. So this is the meaning. This is the applicability, means which type of class should maintain the audit committee. Now, composition of the audit committee. The audit committee must have at least 3 directors. Independent directors must make up at least 2/3 of the audit committee. If the listed entity has outstanding equity shares, only independent directors may serve on the audit committee. The audit committee must consist of members who are all financially literate and at least one who has expertise in accounting or a related area of financial management. The chairperson of the audit committee shall be an independent director. The secretary of the audit committee shall be the company secretary. This is the composition, that who is the member of this committee and who is the chairperson of this committee. After composition, what we have to talk about the functions of the audit committee. According to Companies Act, every audit committee must operate in accordance with the written terms of reference set by the board for the functions of the audit committee. The set forth by the board must include, means what is the functions of audit committee? First, the company recommendation for the appointment, remuneration and terms of appointment of the company's auditor. Examine and monitor the auditor's independence and performance, as well as efficiency of the audit process. Examining of the audit report and the financial statements. Approval or any subsequent modification the company's transactions with related parties. Examination of intercorporate investment and loans. Valuation of the company's undertaking or assets as necessary. Valuation of the internal financial control and risk management system. Monitoring the and use of fund raised through open offers and related matters. These are the functions which are under the ambit of audit committee. Appointment of auditors, remuneration of auditors, as examining and monitoring the auditor's independence, auditor's performance, efficiency and effectiveness of auditing process, analysis of financial statement, examination of financial statement and audit report, modification of company's transactions with related parties, matters deciding regarding the intercorporate investments and loans, company's undertakings valuation or assets valuation if necessary, valuation of internal control system, valuation of risk management system of the company, even monitoring the end use of the fund raised through open offers and related matters. All these activities and functions are under the authority of audit committee for better performance. All these functions take care of by the audit committee of the company. Now, powers of the audit committee. In accordance with the Companies Act 2013 and in accordance with the SEBI, there are various powers that is authorized by the audit committee. First is the audit committee, before the financial statements are presented to the board, has the power to ask the auditors for their opinion on internal control, mechanism and scope of the audit, including their observations and a review of the financial statement. Means, before putting the auditor's report to the board, the audit committee have the power to inquiry about the internal control mechanism, scope of audit observation, and to ask about or to review the financial statements. The audit committee may also speak with the management of the company, external and internal auditors, and auditors regarding any pertinent issue. Again, law provides the power to audit committee that audit committee has to look into any matter related to the matters listed in the terms of reference or those that the board has referred to, and the committee for this purpose may seek professional advice from external sources. Means, audit committee is fully authorized to ask and check the matters listed in its term of reference, and also it can look into those matters that the board has referred. The company is also have the power to seek professional advice from external sources. The audit committee also have the power to ask about or inquire about or check the information contained in the records of the company. With the help of SEBI guidelines or regulations, the audit committee can investigate any activity that falls within the terms of reference. Audit committee can also inquire about information from any employee of the company. Audit committee can obtain legal or other professional advice. If necessary, it will secure the attendance of outsiders with relevant expertise. So there are various powers provided by the Companies Act and SEBI Regulation 2015 in the capacity of audit committee. Audit committee is actually legally empowered in the related company for the financial aspect of the company. Now, disclosure in the board's report. According to the Companies Act, the board report under section 134(3) must disclose the composition of an audit committee, and if the board did not accept any audit committee recommendation, the reasons for doing so must be disclosed in such a report by the board. Means, if a suggestion from the side of board has been declined, then reasons should be provided by the board for the decline of the report. If the company not complies with the audit committee regulations, the company shall be fined with rupees 1 lakh and rupees 5 lakh, and any company officer in default shall be punished with imprisonment for up to 1 year and a fine between 25,000 to rupees 1 lakh. Or so the audit committee is a fundamental element of corporate governance system in public companies. Which public companies? Company having a minimum paid up capital of rupees 10 crore, company having turnover of at least rupees 100 crore, company having aggregate outstanding loans, borrowings, debentures or deposits exceeding rupees 50 crore. These type of companies should maintain an audit committee in his composition. And composition of audit committee includes the directors. And the chairperson of the audit committee shall be an independent director. The secretary of the audit committee shall be the company secretary. The audit committee expected to perform various functions as per the Companies Act. First, regarding the company auditor, whether it is appointment, remuneration, term of appointment, reappointment, etc. It also have a right to check the auditor's independence, performance as well as efficiency of the auditing process, to check the audit report and financial statement, subsequent modification, intercorporate investment and loans, valuation of companies, undertakings or assets, valuation of the internal financial control and risk management system, and monitoring the end use of funds raised through open offers and related matters. These are the functions that is vested in audit committee. Various powers are there to perform good in a company. All the type of non-recommendation from the side of board have to be with explanation, with reasons. So there. Okay, so this was all about the audit committee. It is an important aspect of financial management of the company, because audit committee have right to ask any aspect of the company and liable towards the any liability of the company. Let me discuss the another topic, casual vacancy. As name suggests, a casual vacancy of an auditor may arise due to various reasons, such as death of auditor, resignation of auditor, disqualification of auditor, incapacitation of auditor, removal of auditor, bankruptcy of auditor, leading to the needs for a replacement to ensure continuous oversight of the company's financial affairs. So, casual vacancy can arise due to death, resignation, disqualification, incapacitation, or removal or bankruptcy of the auditor. In depth, if we discuss that what is the reasons, what is the basis for casual vacancy. First is death. Simply, it creates a vacancy that needs to be filled. Resignation. When an auditor voluntarily resigns from their position before the completion of its term, before the completion of its terms, it may be a cause of casual vacancy. Disqualification. A person appointed as auditor of a company incurs any of the disqualification specified under the Companies Act. Any disqualification, they are required to vacate their office as an auditor. this vacation of auditor is considered as casual vacancy in the auditor position. This qualification, the point imparts us that if an existing auditor attracts any disqualification provided by the Companies Act, then at the time of attraction of any disqualification, it is deemed that the auditor has been vacated his auditor position and casual vacancy is the result. Incapacity. In situations where the auditor becomes incapacitated or unable to perform their duty effectively, leading to their removal from office, a casual vacancy arises. Bankruptcy. If the auditor becomes bankrupt or insolvent, insolvent means incapable to pay its future liabilities or obligations. If the auditor becomes insolvent, rendering them ineligible to continue serving as the company's auditor, it creates a casual vacancy. Means a bankrupt person or insolvent auditor cannot continue with his office. Actually, it creates a casual vacancy. So these circumstances necessitate that the appointment of a new auditor to ensure the company's compliance with regulatory requirements and the integrity of its financial reporting. So in summary way, there are various reasons for casual vacancy like death, resignation, disqualification, incapacity, bankruptcy, and one or two maybe there. These are the main consequences for a casual vacancy. Now, vacancy arises due to casual vacancy. How can a company fill it? Let's discuss filling casual vacancy of auditor. Filling casual vacancy of auditor. Point A. In cases other than resignation. In the event that a casual vacancy arises due to reason other than resignation, the board is mandated to fill the vacancy within 30 days. Means if a casual vacancy is there, then first we have to find whether it arises due to resignation or other reasons. If the casual vacancy arises due to reasons other than resignation, then the appointing authority for auditor on casual vacancy is board of directors, and BOD is mandated to fill the vacancy within 30 days. Second category, in case of resign, means if a casual vacancy occurs due to the resignation of an auditor, the board of directors must fill it within 30 days. The appointment made by board needs to be approved in a general meeting convened within 3 months from the date of the board recommendation. So, in case of resignation, there is a requirement that it should be filled within 30 days. The appointment made by the board need to be approved in general meeting convened within 3 months from the date of the board's recommendation. Point C, in case of government company, in case of a casual vacancy arises in the government company, the C and AG is tasked with filling the vacancy within 30 days. If the CAG fails to do so within this time frame, if the CG fails to do so within this time frame, appointment will be made by the board. In the case of one-person company, appointment of auditor in casual vacancy for one-person company will sole direct. So here the situation, when and how the casual vacancy will be fulfilled. In case other than resignation, the board is authorized to fill this vacancy within 30 days of the vacancy arises. In case of resignation, again the board of director must fill the vacancy within 30 days, but this appointment needs to be approved in a general meeting convened within 3 months from the date of the board's recommendation. In case of a government company, C and AG, Comptroller and Auditor General of India. Comptroller and Auditor General is tasked with filling the vacancy within 30 days. If CAG fails to do so within this time frame, the appointment will be made by the board. And in case of one-person company, the sole director will be the authority to fill the casual vacancy. Actually, with the help of reason, it can also be checked that who will be the responsible to fill the casual vacancy. We can segregate all these reasons in two categories. One is casual vacancy arises due to resignation, and rest point, death, disqualification, incapacity, bankruptcy may be clubbed under a separate head. So, to find the base to appoint the auditor in case of casual vacancy, we have to categorize all the reasons of casual vacancy in two categories only. One is due to resignation, means casual vacancy arises due to resignation of the company auditor. Second is casual vacancy arises due to death, due to disqualification, due to incapacity, due to bankruptcy. So there are two approaches to fill the casual vacancy of the auditor. First is but both are based on its occurrence. How casual vacancy is occurred. If the casual vacancy is occurred or arises due to resignation, then the board of director is the whole sole in charge to fill the vacancy within 30 days. And if the casual vacancy arises due to death, disqualification, bankruptcy, or incapacity, then again the board of director are also in charge to fill the casual vacancy within 30 days. Then what is the difference? Actually, difference is the approval of general meeting. In case of resignation of company auditor, the filling of casual vacancy by board needs to be approved in general meeting convened within 3 months from the date of board's recommendation. Rest process is same for filling casual vacancy due to resignation or due to any other reason. And in the case of resignation, general meeting approval is compulsory to maintain the transparency of the auditing work or auditor's independence. Because in general meeting, it is also described by the resigned auditor that what is the reason behind his resignation. And if in general meeting, after the representation shared by the resigned officer, if general meeting or members thinks genuine his resignation, then he may request to the resigned officer that kindly reconsider your resignation. So, in case of resignation of company auditor, casual vacancy will be filled by the board of director, but the approval of general meeting should be there, and it should be within the 3 months from the days of the board of recommendation. It will make the appointment of auditor at the time of casual vacancy very transparent, very transparent. So inclusion of approval of general meeting included or launched by the Companies Act to maintain the transparency in a big level.